Good afternoon and welcome to BizTech's Asian Midday Market Watch, powered by Austral Asset Management. It's Thursday, the 16th of February, and we have our regular Thursday guest, David Kuo. He's a founder of the Smart Investor out of Singapore. David, as always, good afternoon and great to have you on the show.
Selamat tengah hari, Brian.
Now, Selamat Tengah Hari. Now, David, we're going to come back to you with your insights. But first, we're going to take a look at crypto markets, and then we'll take a look at regional stock markets and see how they've performed in the first half of the day. We start with Bitcoin, which has breached the 24,000 mark for the first time in months. It's at 24,670. It's up 11.71%. Ethereum is at 1,695. That's also up sharply, 9.62%. Now, looking across to regional stock market, it's a great day at the markets. The SGX is up 1.19%. Bursa Malaysia is up slightly, 0.15%. Shanghai up 0.81%. The ASX All Ordinaries is up 0.8%. The Nikkei is up 0.72%. The Hang Seng is doing much better. It's up 2.36%. And rounding up the numbers, we've got the Kospi, which is up 1.81%. Now, David, this marks a stark change from when you're normally on the show because we've got a sea of green today. Tell us what's behind this optimism.
I almost have to do a double take, and I almost have to check my calendar to make sure that it is, in fact, Thursday, because not a drop of red ink to be found anywhere, either in the US or over here in Asia. And part of the reason is because when we have a look at what happened in America last night, initially the indices were down because what we had was some retail sales figures that were much better than expected. And in fact, retail sales in the US, I was going to say grow, but it almost surged 3% in January. And people are a bit sort of worried that maybe, the Federal Reserve is not doing its job properly and that maybe interest rates will have to rise a bit faster. But what we need to remember with markets is that it's always a tussle between the bears and the bulls. And initially, the bears had it. The bears managed to pull the market down. And then the bulls turned around and said, hey, maybe we're not going to go into recession at all. Maybe all this talk about earnings being depressed in some way as we go into recession is not going to happen because retail sales are fine. So if you're a retailer, you're going to be saying, okay, my profits are going to be better than expected. If you're a fast food retailer, you're going to say, well, sales are going to be better than expected. And consequently, what we saw last night in America was a sharp rebound in the indices. They all went positive. And over here in Asia, we just followed the leader.
Okay, on a different note, David, so talking about Asia, we had a very startling piece of announcement out of Japan. Today, Japan's record trade deficit, which is 26 billion. David, what does that actually mean in real terms for the Japanese economy, for the yen, and then also for investors moving forward?
Okay, Brian. I mean, look no further than Mr. Xi Jinping over in China. And I think we can lay the blame squarely at the feet of Mr. Xi, simply because when you have a look at that export data, exports to China fell by about 17%. And China is a big trading partner for Japan. It buys a lot of its machinery, buys a lot of its cars, car parts, etc. And what seems to be happening in China is that the recovery that everybody was hoping for is not really happening either as quickly or will happen at all. And as a result of that, what we saw was that exports from Japan to China fell very sharply. I think people are hoping that maybe this is just a blip and that maybe as China starts to reopen, maybe things will start getting better. But at the same time, when you have a look at what's going on in Japan, exports to America were actually okay. And so the Americans are definitely buying a lot of Japanese-made goods, Japanese-made cars, but the Chinese, which is a much bigger trading partner, is not at the moment. And that kind of accounts for why that trade deficit was so huge and so shocking.
Now, David, then I want to switch over and stay still in Asia. We want to look at China since you've mentioned it, because China has a lot of Xi Jinping has given a lot of support to the property market, but then house prices are still falling. What are your thoughts on this? Is the end in sight for the long suffering, well, not so long suffering Chinese house buyer?
Well, the thing is, I mean, this story and the one previously about Chinese consumers not buying as much Japanese goods are somewhat interlinked. If you think about it, if you are a homeowner in any country, a lot of your wealth is actually tied up in the place that you are living in, particularly when you own that building, that space that you habitate. And so therefore, when property prices start to fall in China, then of course people feel immediately less wealthy. You thought you were rich yesterday, but today you are a few percentage points poorer than you were previously. And so that will have some kind of impact on your consumer sentiment, the people who are going to be going out and buying. Now, I think the Chinese Communist Party realizes this, and they're trying every possible way to try and lift property prices. But at the same time, everybody around the world has been saying Chinese property prices are expensive, they're overpriced, and they need to come down. So what is China, what is the Chinese Communist Party, or maybe even the People's Bank of China going to do? They're going to try and keep interest rates as low as possible, but that is almost admitting defeat, because whilst you are doing that, inflation is actually creeping up at the same time. So China just has to accept that, it has to allow whatever is going to happen. And property prices need to find their own level. And then maybe only when that happens will people be prepared to go into the market and buy property again. Just simply telling people, throwing money at them and saying, go out and buy property, we'll give you loans, we'll give you all sorts of things. People are not really that stupid, because they know that buying a property is not something that you do today and then it's going to be done tomorrow. It's over a long period of time. So China needs to learn, what real economics is, rather than Chinese economics with the Communist Party slant on things. Economics is economics.
Now, David, on that note, economics and economics, that ends our edition of today's BizTech Asian Midday Market Watch. Thanks for coming on the show, David.
You're welcome. Thank you.
Now, I've been speaking to David Kuo, founder of the Smart Investor in Singapore, on BizTech's Asian Midday Market Watch, powered by Austral Asset Management. I'm Brian Fernandez. This interview will be on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.